Hey team, Apex Trades here, hope you are well. Today I just want to talk, I think, a little bit about the difference between the different types of blocks that you see, whether they are order blocks or breaker blocks, whether it's mitigated, unmitigated, and kind of trying to demystify that a little bit. I see a lot, in my Discord server and some other servers I'm also part of, I often see that question asked. And so I just thought, why not just do a quick video, maybe explain a little bit about the differences between them. We're on the BTC chart at the minute, currently on the 15-minute. And now, I think the term mitigated and unmitigated is probably not even the right term really, but the way I kind of think about it, and logically, is, oftentimes, let's say, if we want to use, let's see, like this move here. So we created this order block, right? And the order block was created because we had this big engulfing candle here, which reversed the direction of the way in which, previously we were heading down. And then, big move to the upside, obviously creating an order block. The idea, and I don't believe this is true, is some sort of institutional based, level that decided here's where we're going to change direction. I don't believe it is that. Sometimes it's just, money comes into the market at certain levels, and once they do, the algorithm of this Lux Algo price action concepts will create an order block obviously on the chart. And so, you can think about that as you will. However, I always say these things are like mass psychology. If enough people believe them, then, oftentimes it can still be enough money to move the market. And so this is what we would call this one specifically an unmitigated order block, and it's unmitigated because it hasn't been tested. You could say that this one was a mitigated one in the sense that right now it's been tested a number of times. Mitigated though is not really the right word to use, even though it's used in that context, because mitigated would say, once an order block has been hit, or when the candles close below it, then it no longer becomes an order block. Oftentimes what happens with all of these things, and I think with a lot of kind of these SMC style traders get this wrong, is they will hit an order block and then they'll have the orders to go long at that point, because you're expecting, it's happened before, we've had a nice engulfing candle which has created an order block, and therefore now it's time for that to act as a support. And more often than not, it's still not a bad idea. You can still get small scalps, because we can see order block was created, we hit it here, little move to the upside, but you can see we're still kind of coming into that zone where it looks like it's going to break. And so what I never trade these order blocks, simply because I can clearly tell it's had a number of hits. And with anything, whether it's supply, demand, support, resistance, with enough times it gets hit, the more times it becomes hit, the higher the probability that that level will break down, whether that's to the upside or the downside. So the best one I like is the unmitigated order block, because it hasn't been tested yet. And specifically like this kind of level where you've seen that huge move to the upside, respectively huge in comparison, let's just say, that's a nice zone. And so this kind of unmitigated order block is the one that you're going to go for, because the pattern that you tend to see is like, if let's say, let me see if I can just push this up a bit easier so it's easier to see. What will tend to happen is this structure will be to the upside, will come down here, nice move, then that's the order block here, right? So the order block's being confirmed because then we've had another move, right? And the bias, let's just say, is continuing to the downside. And so let's say we hit this a couple of times. The way SMC kind of works is the moment you come back into this order block is your, you'll short the short entry. But the problem is it's been mitigated by the fact that we've had at least one hit already. And then a lot of the kinds of high leverage traders and stuff like that, they'll have really, really high leverage, they'll have tight stop losses, and this will be, this area they'll think is the main order block. But the problem is, and this is how oftentimes it gets trapped, price will move down and you will think, okay, brilliant. I'm an SMC god. I am the god of SMC. I'm able to catch these every time. The problem is that very rarely happens, because what will happen, and you see this more times than you don't, is it comes back up to the unmitigated order block, which is the one above, before then the real activity of moving to the downside. So all of this liquidity being built up here is nothing more than a washout. For those that have aped into the first order block, thinking that that's the one that they need to focus on, but really it's the unmitigated one, which is at the top. And as I say, what we'll do, I'll just delete that a sec, is we can just run through some live examples of the differences between, you know, the mitigated versus the unmitigated. So right now, you know, everything is relative to price action, right? So, you know, the move is to the upside, as we know. So let's say price has gone up. We've created the main order block, which is here. Price has come up again, lollygagged a little bit, and now we've got this order block here. Okay, so what will tend to happen is people, like I just showed there, this will be the zone where people are, you know, aping into longs, capture all of that liquidity, get a lot of commitments in this area, and then, you know, price might come up to here, just as an example. But we'll see that this is live, obviously, so we'll know whether this prediction is true or false. But I can almost guarantee that price will wash all of this out. So you will probably get a move to the upside. You know, I don't think it'll come down here at this stage, because it will want to, the way liquidity providers and market makers and stuff like that will want to do is to maybe kind of get a lot more liquidity built in this zone, push to the price to the upside. Greedy people won't take any profit off the table, and then as a result, price will come down, and for me, you know, tap this order block here before maybe coming back up. Now that may or may not happen. It all depends obviously on the bias of which way we're going, but it's the unmitigated order blocks that I favor over these mitigated ones, because these are the ones that I kind of feel are the early entry ones. Now, like I say, if you're just trading on a day trade and you can accept that you're only looking for, you know, 100 basis point move or whatever, then good on you. That's probably still a good plan. And the way I think about these is these kind of initial blocks versus the unmitigated ones are more, for me, day trade and more swing trade. And obviously it depends on the time frame, but this is on a 15 minutes, so, you know, just be mindful of how these kind of work. The unmitigated ones are the ones that, for me, where we get the, you know, big liquidity spikes, jumps down, and then, you know, we can tend to see that enough liquidity is being gained on the smaller order block or the mitigated one before the price moves to the upside. Now, the other thing I wanted to show was breaker blocks. So now that we kind of understand the difference between a mitigated and an unmitigated order block, and perhaps how we'd use them in trade, let's have a little look at what a breaker block is. And in all honesty, breaker blocks are nothing more than a supply becoming demand or support becoming resistance, but it's used a breaker block in the same vein as an order block. So we've got it ticked at the moment. We don't have any breaker blocks currently on this one. Let me see if we can pull up a different coin. Let's try ETH. Nope. BNB. Nope. Litecoin. Yeah. Okay. So Litecoin showing breaker block. So you can see here where we've got these order blocks coming in again, you know, usually denoted by some sort of a, you know, a candle that's engulfed the previous one, where, you know, volumes come in. You can see this huge volume spike that's broke through what was previously a bearish order block, signified by the fact that this red background, I don't know if you can quite see that because it's on a black background, but you can see these are kind of acting as support based blocks, and this is acting as a resistance based order block. Now, the reason it's still a resistance one is because the price is broken through, but now it's being denoted as a breaker block, because this will now, which was previously resistance, will now act as a support. So what the thesis is that we come down and test this order block before another move to the upside. So you might find that price could come down to here, test this zone, and then carry on moving to the upside. And that's essentially what a breaker block is. It's more like usually once an order block's been broken or mitigated, and it disappears when a candle closes below, that level, or however you determine that mitigation is, whether it's wicks or whatever, to close the candle. That's it. It's gone. Normally it'll just disappear off the chart. But when you break through and it's still valid, it will turn into a breaker block, and this is exactly what it's seeing. So this breaker block is staying there because there's an anticipation that we'll come down and retest this to act as a support, in which case this should, I think, if memory serves me right, maybe turn green like these once this has been acted as a support line. So breaker blocks, order blocks, mitigated, unmitigated, I think there's a lot of confusion on how they work and how they operate, but always have it in your head, the mitigated order block for me is almost like the liquidity builder. The unmitigated is really the one that you want to focus on in terms of the response. I mean, look at this. So this is mitigated because you can see order block was created on this candle here. Then we had a test of it here. So this is really a mitigated one. This is an unmitigated order block, and this is an unmitigated. Well, actually, this is a mitigated block because we've already tested it. So actually, I would probably suggest that this would be what we'd classify as the unmitigated one, because it's not yet been tested since it's been formed. So again, just understanding the differences between the two of them, I'd favour this one. If I was going to be trading, I would be favouring this order block specifically over these two, just in terms of where we could go. Litecoin is absolutely flying at the moment. Oh wow. So that's it really. Any questions, drop them in the comment section. If there's anything you want to get into deeper conversation, Discord link is in the server. It's why I've probably been not on YouTube a lot lately, because I've been kind of growing the server and trying to do a lot of other kind of different things and whatnot. So always a fun place to be. If you guys want to learn more and you want to follow along, get yourselves over to my Discord server. That being said, I'll speak to you guys in the next one. Speak to you soon.